for another weekly installment. And today we're talking about some major things that have happened in the last couple of days. Last Wednesday, I came on and I was short the market and it rallied into Thursday and Friday. And then we had some relief, thankfully. Oh, we finally had some relief on Monday and Tuesday. And then today was a down day. But what happened? Oh, of course, after hours, NVIDIA released earnings and they got short squeezed another 27% up, and they dragged the entire NASDAQ 1.5% up after hours, 1.6% last I checked, which is just wild to me that there's been such swings and so much, it's just crazy. This yin yang of a market, and the FOMC minutes came out at 2 o'clock today. Oh, I'm in a different room today because I don't know. You guys want to see it? I'll show you this room, and I'm just hanging out in here. This is our pool room. So yeah, whoa. I'll give you guys a little tour just for fun. Oops. Got a little pool table. Got a little bedroom and a bathroom over there. In the basement, but it's a walkout, so it's not really a basement. But check this out. This is my favorite part of this whole room. This right here. This way, super cool. You're like, oh, what is this? Oh, it's a super heavy, but super secret. Shh. I have a secret room. So this actually opens up, and you've got a movie theater in here. Oh, wrong way. We got a movie theater in here. Projector up there. So we come watch some movies sometimes. Sorry, my kid stuff's all in here. All right, it's a secret room. Not giving you a whole house tour today, just one room. Just one room. All right, back to this is where I've done some crazy trick shots on this pool table here. All right, I'll plug this guy back in. Oh. Did that turn on? No? Wow, let's talk about that too. Someone just brought something up about the new ADU rules in London. Yes, Bill 23, they're forcing every place in Ontario to now basically have to allow accessory dwelling units. And so for real estate, that's really great. It's a really bullish thing. We love that, we want that. Yeah, it's just something that was good. And we'll talk about how London, I'll just say it right now. So London has a 5-bedroom rule across any property. You cannot have more than 5 bedrooms across all 4 units. So if you're going to add a unit, you have a 5-bedroom house, you can't add a unit. Can't make it a duplex, can't add an ADU, accessory dwelling unit house. You can't do any of that. So it's basically a moot point in London. But let's talk about the stocks and stuff first, then I'll get into that as well. Mikhail, I'm good. Thank you for the question. Big fan. Thank you. Paul, how you doing? Good. So talking about the, I guess I'll finish that thought and then I'll go on to talk about what's happened in the stock market today. Because what the heck? A fly got in here. See that? There's a fly. If we see that fly come back again, I'm going to Mr. Miyagi it. I need some chopsticks so I can grab that guy. I back onto 150 acres of wooded. In the front, I front onto London. There's like I can walk McDonald's, Tim Hortons. This lot was like my dream lot when I bought it. It's 1.2 acres, but I back on 200 acres and I have no neighbors at all. And I'm literally like, I can see Oxford. It's beautiful, like a country in the city. But one of the downsides to this setup is, despite having no neighbors and all of that, because I back on 100 acres of field, if we leave our windows open or our doors open or my kids leave the door open which is what happened, left the door open for the day, don't close the sliding door, then the flies will come in. And so it's a bit of a challenge to live country and city. You get in the city too, and we are technically on the edge of London. Like I can walk to amenities, but yeah, that's one downside con. So when that fly comes back over here and gets attracted to this spotlight, which it will, I'm gonna Mr. Miyagi. Oh, there he is. I'm gonna Mr. Miyagi him, and just grab him right out of the air and teach him a little lesson. So help me watch for that, guys. What happened today? So the last 2 days we got a pullback in the stock market, which was fantastic. It was needed. It was natural. It's exactly what we needed to see in the market. Like the NASDAQ is up 27%. 27% on the year to date. That's since the start of this year, in January 1 of this year, in the 4 or 5 month run. That's insane for the index to run like that, given current conditions, because core inflation's 5.3%. Your mortgage rate right now is like 7%, let's say. Those are not good economic conditions, and we're going in, all the data is looking bad, GDP is dropping, as we're going into at least a mild recession. And NVIDIA, after hours, is pushing, it's way past all-time highs. It might even push $400 a share. It was $100 a share 5 months ago. So if you bought in shares in NVIDIA, you made a 400% return. For some of the largest tech companies in the world, to move 400% in 5 months in recession, that's just like the short squeeze is unreal. So I'm gonna short that tomorrow a little bit, just a tiny little bit. Don't take big positions, don't take big risks, you know. I do have an open short out, but I hedged my short. I wasn't sure how NVIDIA was going to behave. So I would say, you know, I had to be cautious. So I actually bought 200 long contracts on the NASDAQ just before close for like between 28 cents and 50 cents for the 2 different strike prices. And tomorrow morning, those are going to open up probably plus 1,000%. So it's a $9,000 insurance policy basically I bought for tomorrow, and it's going to pay out. Oh, there he is. Little bugger. He's still fast and full of life. Over time, the flies, they lose their ability to move quickly. This pesky fly. I've been seeing him around for a while now. I'm wanting to get him. I need a fly swatter. But I lost my train of thought there. What was I saying? Oh, natural market moves. We've seen this last month, the Nasdaq's moved up 5-6%. That's not normal. That's not something that we would expect to see every month going forward. Usually there's a natural correction. And so we should probably see that at some point. And I'm betting that we do. And I'm thankful that I hedged. I'm going to use that profit from that hedge to go more short and buy more puts with a defined risk that if things continue to deteriorate, I think they will, into the debt ceiling conversation, into the next inflation reports. One of them is not going to be as good as we had hoped. And I know the Fed has a job. The Fed continues to say that their focus is to not let rates fall. They're going to either raise them or hold them for the rest of this year. Market is pricing in rate drops by September. So they're saying rates are going to come down like 1.5% between September and the end of the year in December towards January. That's a huge amount that the market has priced in, I think, incorrectly. They think more pain is coming, I think, and then the Fed reacting to that sooner than potentially will. The thing is, it's hard to tell because the Fed continues to say that they're steadfast, they're not going to lower rates, more rate hikes potentially. If they say they're going to lower rates, then what that does is basically defeats the work that they're trying to do. They need market sentiment to be that inflation is going to come down. And if the Fed isn't serious about delivering real pain and keeping interest rates high, we can't believe the Fed. It'll be a lot like the 70s where they pause for too long, start, stop, inflation battle 5-10 years. So they need to be very serious. They need people to believe that they're serious. Whether or not they'll get the result, it's between the rock and the hard place. We've been watching this for about a year now, and almost a year and a half now, and it's like, that fucking fly, I'm gonna get him, guys. Yeah, I lost my train of thought here. Okay, you guys lead the conversation. Tell me what you want to talk about. David says, hello again from Alberta. You need to move here, Mike. Lowest corporate tax rate in Canada, only 8%. That is true, actually. Alberta is very attractive from a tax perspective. If you're going to domicile somewhere, Alberta is one of the best provinces to do it by far. They're the most freedom-orientated. They're the most right-leaning. With that comes some fantastic business policies like an 8% corporate tax rate on the first $500,000 in income. It's even less, I think. Which is fantastic. I mean, you can operate a business. You don't have 13% HST sales tax. It does make a lot of sense, actually. And it's beautiful near Banff and some certain areas. Even Edmonton's not terrible. Calgary's not terrible. There are some decent places there. You can get away to the mountains and have some really cool views. And yeah, so I don't know. For me, I think Bahamas makes the most sense as a tax structure just because it's zero. There's no tax at all. And so that's probably where I'll eventually end up. I don't know. It's something I'm thinking through still. If it was just financially, like the decision was financial, I'd be gone already. But there's emotional decisions and cultural decisions, and it's a lot of work to file an exit return. And so they use that against you, right? They make it hard to leave Canada. You have to pay to leave. And it's not only pay with time, but pay with money too. You're gonna have to pay an exit return on the value of your assets and move them into corporations and things like that. So pros and cons. Halifax, yeah, 100%. Oh, whoa. My camera just came loose there. Don't know how to fix that. Trying to, but there, let's see if I can tighten that up. Whoa, no, that was worse. That was definitely worse. I might have made it worse there, but we'll continue on. Currently sitting on a good sum of cash on Vancouver Island. I'm wondering if I should buy or wait. Probably the bottom is in when rates start to fall. Sometime 4 months after that point. So you'll probably find a wait, to be honest. I don't think the market's going to rally beyond you get a spring rally, but I think there'll probably be a slowdown in the summer. December, January is going to be a great time, I think, to buy. So wait for that, in my opinion. But I mean, yeah. Assuming you're referring to real estate as well. For bathroom gut renovation, Alex says, how do you structure payments for tile? Seems that the bulk of the labor cost is tile. Thanks, Mike. I don't know that the bulk of the labor cost is tile. Like, it depends what you're doing, right? If you're changing out the plumbing fixtures, plumbing could be the largest, potential cost in total. If you're changing out a tub, or you're changing out, a shower base, and you're putting a new valve system in, you're doing the toilet and the vanities, plumbing could be your number one cost typically. Drywall costs are also quite large, depending if you're redoing drywall. Some of the old bathrooms have mold in them and things. You gotta take the drywall out and redo it. But tile doesn't need to be that expensive. You could just vinyl plank that damn boy. You know what? We're going back to the office. Forget this room. Tired of it. You guys saw the pool room. Going back to my office. I'm not letting him sneak through these glass doors. He's over there. He's hanging out. We're gonna sneak over, guys. Whoop, whoop, whoop. Okay, guys. Whoa. Go over here into my office, where there is no fly, hopefully. You sun beach. There. So, guys, how's it going? Been working out, guys. You notice that? Putting on a new routine where I've been pumping iron. All right, I'm just gonna plug this light in 1 sec. Okay, ask some more questions if you got them, and we can end the stream early if you guys want. I mean, I'm totally cool with that too. It's whatever you guys want. I'm here to please, here to serve. Okay, to answer your question about the bathroom, you can get guys to tile relatively cheap. I used to get sub trades in where I would supply material, and all they had to do is just, like, if it's a fresh substrate and you put the drywall on, or get someone to put the drywall on, you get a tiler to come in for I think it was like $800 a shower for labor. It's a 2.5 day job to tile shower walls. Vanity is really easy to install. Toilet's easy to install. A good contractor can do a bathroom in 4 or 5 days from start to finish, depending on the scope of the work. But a lot of these guys are not good, and they take a long time. They drag it out. And of course, the premiums are unreal. Subtrade. Bring in a guy on the weekend, pay them on the side, $50 an hour, a good tile guy can lay a tile floor in the bathroom and tile a shower, and then come back the second day and do all the grouting and the finishing. Like, it's not two days really is what it takes depending on the size of the washroom, obviously, but it can be done in 2 days. So if you're paying $50 an hour for an 8 hour day, that's $400 times 2 is $800 labor cost. And I know those charge $10,000 to that job, and that's because they're running around getting materials, and there's a lot of little things. But if you do all the little things for them and just hire someone just to do the tiling, you're in a different situation, right? So, yeah. Next question was, have you ever used one of those ozone generator machines to fix a smelly room? Do they work? I have had friends tell me that they work all right to get rid of smoke and things like that. I haven't had that success. I haven't used them really. My technique's been cleaning, TSP, clean it well, and then repaint and then new floors. That's been my best way to get rid of smells, to actually remediate the flooring in most cases has solved that issue. So, hey Mike, when working on properties on market, do you recommend asking for VTB up front or after sending an offer in to negotiate? It depends, right? Like your strategy, your approach to getting the best price on the property comes down to understanding who you're buying from. You have to understand your seller. And so some sellers are open to it, some aren't. I've found that sometimes you could go in with a higher price and then come back. This has actually worked in Florida with a deal we did where we got it was a 3 or 3.5% vendor take back interest only mortgage. And we came with a higher price. They obviously said no to that. We came back again at a lower price. They didn't like it. We came back at the higher price. that was closer to their asking price, not all the way there, but came out that vendor mortgage, and that was more amenable to them. So it just depends. Sometimes you can give them more price. Like you come in low, sticker shock them, go 100,000 they're asking, and say, hey, we'll take it for cash. They're obviously going to say no. If they say yes, awesome. You get a house for $100,000 under what the asking price was. Otherwise, you go and try some of those other special tricks, or maybe you get them to do some extra work on the property, or maybe you get a vendor financing in there, or there's some sweet clauses you can add in there that make it attractive for them. So yeah, TSP is great. Big fan. Big fan of big fan of TSP. I just messed up that whole thing. Can you guys see me? Hello. So Alan's there. Question is from David next. So when you rent a home with a backyard and a driveway, how do you do lawn maintenance and snow removal? So the way you're supposed to do it to protect yourself is to have a separate contract where you compensate the tenant for doing the snow and the grass. And so you would add on to the rent, say $100, and then you have a separate contract where their lawful rent is their lawful rent. And then on a separate contract, you give them sort of a credit for doing those services. So if they stop doing it, you don't have to fight with them about the rent discounts, because that can get messy and they end up getting a free rent discount. So always overstate the rent and then give them a credit on the side with a separate contract, protects you for liability and other various things. So I wouldn't put it in the lease, I put it separate to the lease. But I have seen it done where people have prompt payment discounts. So they'll say, hey, we'll take $40 off the rent if you pay on time. And you basically are just listing your house for an extra $40 more on your listing. And you say, hey, I'm gonna give you $40 off if you pay on time. Any good paying tenant's like, awesome, I get $40 off the rent. It would only be a bad tenant that would pay, or someone who ran into financial issues, in which case they deserve to pay more because they're not paying you on time, right? That's the only way you can lawfully in Ontario charge a late fee, because late fees are illegal. You can't actually charge a late fee to a tenant, but you can do a prompt payment discount. You can also do other discounts, like you can offer them a discount for lawn services or something. You could try to put that in the lease. I wouldn't recommend that. I'd rather have that as a separate contract, but there are definitely ways where you could build in some sorts of discounts that you can then take off if they don't honor that part of the commitment. TSP works well. Do you have an IBKR referral link? I do, David. I do, yes. So hit me up on Instagram. I will do a share about how great IBKR is tonight. And if you remind me, and I'll put a link in there that you can click on my stories to get the referral. I don't know if they actually pay you anything. They probably pay us both shares. There was a time where they did. I don't know if they still have the promotion going, but I'll share you a link anyway, and then you can join up. Because Interactive Brokers is the best. They have the cheapest stock margining. So you can take your blue chip portfolio of stocks and borrow 70% loan to value against it. In some cases, 75% loan to value, depending on the quality of the stock. Some blue chip bonds and stuff like that, you get 90% loan to value, which means you can borrow 10 to 1 against bonds. When Interactive Brokers, so like a year ago, Interactive Brokers, they lend at prime minus 2.5 typically. So prime minus 2.5. So when prime was 3, they were lending at 1% interest. You could borrow $1 million against your stock portfolio, sell none of your stocks, don't want to touch anything. You migrate whatever stock portfolio you have with your stockbrokers, or if you have one at work, you can migrate all those plans over. If they're unregistered, you can do debt against them. So any unregistered stock investments, put them into Interactive Brokers, move them over there from Questrade or any other TD, wherever you had them, bring them over, and then you can all of a sudden get a line of credit automatically. It's an auto approval. You can borrow against those 70% loan to value, 75% loan to value, depending on the stock. Riskier stocks, you get a lot less loan to value, obviously. Don't borrow all the loan to value because you don't want to have to get a margin call. If you are going to borrow a lot of the available credit they're going to give you, make sure that you put some protection, some insurance on your portfolio, like I did this afternoon when I bought 200 long calls to protect my short position against the NVIDIA squeeze that's happening right now. Go check it out. Look at NVIDIA's stock price. They're up like 29%, being squeezed after hours. They dragged the entire NASDAQ up 1.7%. The whole NASDAQ, 1.7%. We're talking like $1 trillion swings from today. It was minus 1.2%, I think, at the low today, to now being up like 1.5% after hours. It's almost a 3% swing on the day. 3 to 4% of the entire index moved in a day. We're in crazy times. There's a lot of volatility. What that means, though, is you can make a lot of money, because volatility is where options just print money, because you collect all of that uncertainty. So you could strangle it, where you could set up calls. You could just buy a bunch of calls and buy a bunch of puts, and your risk would be defined, and you could collect, right? You could sell the spread basically, right? So you could do, if you were bearish, you could do a bear call spread where you had sold one in the money and then bought another one further out of the money to protect yourself in case it runs on you, and do the same thing on the put side. And so that's really an interesting strategy. Soon I'm going to have an announcement. I'm going to stop trading. I've been trading now for a couple of years. Well, I've been trading stocks, not options. I'm trading stocks for 11, 12 years, but I'm going to peel back from doing that. I find that it takes a lot of my time. The ROI is not that great. I could take my entire net worth and probably get a better return just passive buy and holding with a quality portfolio and taking that capital and investing in real estate where I can get extraordinary returns. So soon I'm going to put my portfolio on autopilot, and I'm not going to check it. I'm going to put rules in place so I can't trade it and I can't even think about it. Because right now with this today, as an example, I was sitting there and I'm watching these swings, and it affects my ability to concentrate on doing real estate deals. And at the time I'm investing, I can make $1,000 an hour in real estate. With trading, I probably make $100 an hour, maybe $200 an hour. I don't know, like probably less some days. And it's like, it's not even the time, it's the stress of the swings. So from Wednesday to Monday, I had like a $250,000 loss on my portfolio, and I made most of that back. But it's just like the swing of that is hard on the heart, and it's hard for me to want to be in a good place and be productive on those days where it's just not going my way, where I've went long and the market's down, or when I went short and the market's going against me. Just in general, checking it and thinking about, did I make the right decision? Did I hedge properly against this said risk? I'm thinking through strategies to outperform. And to be a good trader, I'm just going to say this, to be a good trader, you have to spend 80 hours a week. It's a fact. You trade a couple hours on your phone every day, you're not going to outperform the market. You can create liquidity, you can have cash flow, you can make your 10% return. If that's your goal, okay, awesome. You could probably do that passively with no time investment at all. So then it begs the question, why invest a few hours a day when you can invest no time and do private mortgage lending and it would be completely passive? So it's like when I can lend to people, super safe, low risk, secured against their property, and if things go wrong, I take their property and I keep 30% of their equity in those types of situations where I have very, very low risk and I can make a 12% yield. Why would I go do options trading to make maybe 15%? You can't outperform. It does happen. But over a long period of time, over 20 years, the number of traders that outperform the index is rounded pretty much to zero. It's the same number of people who can sleep less than 5 hours and perform at their best. Statistically, it's zero. There's no one who can sleep less than 6 hours consistently for a long period of time and perform at their best. It just isn't true. You measure their cognitive abilities, you measure their physical abilities when they've slept well and when they haven't, and there's a drop. You're less effective. The same is true when you're actively trying to trade your portfolio. You can win for a little while. Like I can be short right now, I'm short the market, and if the market does rip down 10 or 20% and I end up 30, 40% ahead of the index, stop. Like if you've beat the index in that year, statistically, you're not gonna beat it again. Stop, buy the market, and buy and hold. There are places you can beat the market in the stock world. Like there are some small cap stuff, there are some interesting IPO plays where you might have insider information, or if you're spending 80 hours a week and you're really good and you've got a team of people, because by the way, in the stock world, you're competing against the best people in the world. Like you're competing against the smartest PhDs and quants and bots and soon chat GPT and just teams of hedge funds of the smartest people in the world. And if you're not the smartest person in the world, even if you are the smartest person in the world, you're not, get your ego, check it aside. But even if you are, you have to put in the time. And that's like, it's a job. Who wants a job trading? I don't know, not me. So for me, I'm gonna make a shift. I have enough passive income that I'm probably not gonna be trading anymore. It's more for emotional reasons that I'm not gonna be doing it, but I'm waiting until I've seen this short thesis that I have through. So when I'm right on my short thesis, or if I'm wrong on it, I'll abandon the thesis. Currently, I continue to see data that aligns to my point. I see the bull arguments, so I continue to hedge because it could go to the moon before it goes down. But at some point, we're going to have a bit of a rough patch and things are going to retrace. We're not going to finish, I don't think we're going to finish the NASDAQ up like some people are saying the QQQ could be 400 at the end of the year. I'm like, maybe, could happen. Not very likely. More likely than not, we'll see some retracement. So I'm going to see this thesis through. I'm going to see if the macro data continues to support. I need about 3 or 4 more inflation reports to make my decision. I need to see how the Fed reacts to those decisions. I need to see how commercial real estate, some of those big renewals that are coming up, how that kind of plays through. And I need to see how this banking crisis plays out, because if we don't get some more pain, the Fed isn't going to lower rates. And that would mean pain, a lot of pain for tech valuations. So I'm going to see this through. When I do see this through, I'm going to go back to just long-term strategy. You're going to see me talk less about that. I'm not going to be watching as much of the stock stuff. I'll still watch it because, again, as a real estate investor, my real estate business, I want to start focusing and dialing in on that. So the time I was spending, trading and market research, I do less of that and more real estate market knowledge. So if you're interested in that stuff, there's going to be more of that content coming for you guys. Again, I want to launch something with the Freedom Academy. I want to partner up with someone to help me build up that content. I'm also really, really interested in building out potentially a fund. So that might be coming soon. I've had a few people approach me now, and I've been thinking about it, maybe coming on and joining a real estate fund where I could head up acquisitions or head up capital raise. Those are two things I love to do. So I love discussions about how to put people's money to work to make more for themselves. People are horrible at allocating their capital. I know a lot of people who've got money trapped in like GICs like 4%. People who have just cash sitting on the sidelines. I know also tons of terrible investors who could do so much better. In the real estate world, I can put in 40 hours and I can have a huge competitive advantage. I can buy buildings at 20, 30% discounts. And at scale, that means tens of millions of dollars. I can't do the same thing in the stock market. To get that edge, I would have to spend 70, 80 hours a week for many years and build out a team. It's just not something I'm interested in. Like the stress of it, whereas in real estate, I don't feel that same stress. If a deal goes bad and it isn't how our numbers ran, which is rare, it happens. Markets, markets do sometimes go against you, right? And maybe the real estate market is in the shitter for another year or two. That's fine because we buy with the 1, 2, 3 punch. And so it's like, if that doesn't work, you can't flip the property, you can hold it and you can cash flow it. And you always win for the long term. That strategy wins. In a low interest rate environment, my dividend strategy works really well too. You guys, that was the thesis of why I got into trading, was running the options wheel on quality blue chip dividend stocks. And Interactive Brokers was lending at 1 and 2%. And that made a lot of sense, right? And you can buy a stock portfolio of stocks. Some of them are paying 8, 9% yields in 2021 coming out of the COVID recession. And you get 8 or 9% yield and borrow 1 or 2%, 3 to 1. You could hold companies like Enbridge, TD, Scotiabank, quality blue chip names, like REITs, real estate investment trusts. You could hold quality buildings and stock portfolios in Interactive Brokers. You could have a balanced portfolio that produced cash flow with a debt service cost of 1.5% because it was so cheap. Money was so free on Interactive Brokers. It still is free, by the way. You borrow like 4.5% in Interactive Brokers. Prime is like 7%. So you still borrow super, super cheap on Interactive Brokers. It's just that spread between what you can get on a dividend portfolio, say it's 7% or 8%, and that 4.5% isn't as juicy. It used to be a 600% spread. And in normal markets, it's the best performing strategy for the risk. It's really good, low risk, high cash flow strategy. And I would probably go back to wheeling that strategy again at some point, but in a very more passive structure. So I would do monthly contracts instead of daily. The daily stuff, there's a lot of swings. You can make a lot of money in a quick amount of time, but there's a lot of risk, right? So I think that my time is probably better spent building out something massive and awesome. And I'm looking for, and I might have found it, and I have found it in parts too. Like my brother, as an example, is a fantastic GC contractor. And when I put him on flip projects, he's amazing. And my cousin's very good too. He's up and coming. And so I have a family business of people. My dad could, honestly, I hope he's not watching this, but he could try a little harder, work a little harder, to be honest, on the flip projects we're on together. But it would be like, this family business is great. I like my little small family flipping business that I have going. And I like that I can rely on family to get things done. And I get to provide them a living, and it's mutually beneficial. They get to just work in the business and call their own hours, and it's great. But if I could find a really good running mate on the property management side that could do Airbnb management, that could do property management and do it well, because most of the property managers don't do it well, could do it efficiently and do it well, and could just clean up my mess behind me as I buy so many amazing wedge deal, arbitrage deal properties. And I would just arbitrage the hell out of it, because that's my alpha, that's my edge. I can buy buildings at extreme discounts. I'm good at it. I'm good at negotiating. I'm good at seeing value where others don't, and a path to that value through renovation, through strategic improvement, through pivots, things like you can take a motel and you can add kitchens to it, and then all of a sudden it's now an apartment building. And you can buy them at 50% discounts. It's just crazy opportunity out there with a slight reposition and improvement in the net operating income in the commercial space, you can get crazy. And by commercial, I mean residential commercial. I don't like office space right now. It's just not been a place I've played in. However, someone just told me there's 95% loan to value mortgages at really low rates in commercial. So maybe I just didn't see it through the right lens. But for me, that's a place I can spend time and I can focus and I get a maximum amount of effort or maximum amount of reward for my effort. Whereas in trading is fun. It's like gambling. I have a lot of fun doing it. And when my edge plays out and I'm able to develop a little bit of an alpha, it's like it's fun and it's exciting. I get the same high in real estate when I crush a deal. If I had someone behind me to just handle operations, that would just be fantastic. So I would give away, half my profit happily to have someone deal with all of the crap post-close to when we eventually refinance or sell. I love financing. I love, capital raising. I like to discuss that. That's fun for me. I love negotiating and going to look at properties and structuring and doing design plans. Like that stuff I love and I excel at. That's my best use of my value. Managing people, I hate fighting with contractors. I'm decent at it. I'm good at squeezing contractors. I'm decent at firing people too. I don't have a problem with that. I've probably fired 200 contractors in my life. So like I've had screaming matches. I've had the police come. I've dealt with all of that. The death threats and they come and they call the city. I've dealt with all of that bullshit. And I'm not proud of it, but that's the business. That's how you do real estate well. When someone comes to me and says, oh, I don't like to negotiate with the contractors. Like whatever they tell me to pay, I just pay it. I'm like, you're going to fail at this. Like you're not going to flip well. You're not going to be a good real estate investor. You need to have a backbone. The secret to success in business is negotiating and finding common ground and working with someone to really find value for both parties. But it is definitely a battle. And if you are not hardened steel to steel, you will get rollover. It just is what it is, especially in construction, especially in real estate. So anyway, yeah, that's my anecdote for today. Let's go back to the Q&A for a sec. Please put fund on Addy. I don't know I haven't looked into Addy or how it works or what their fee structure is. Maybe it's worthwhile to look into. Potentially, maybe. I have to look into it further. I would like to have my own platform, ideally, but yeah, could be good. Okay. Hey, Meg, what's your opinion on structural issues on a property? Clean property, but all floors have slight slope. What's experience of jacking a property worth the headache? With these older buildings that have the structural issues, it's probably better to shore up and stop any further sagging than it is to lift the building and fix the sagging. You can stop it in its tracks and resupport where it's not great. That's a relatively cheap solution. To put a post, a beam and a post in the basement, couple jack posts and a beam, you can support all the floor joists and potentially alleviate any load issues, put a new footing for those. That would be an easy fix, right? A couple thousand with a decent contractor. If you went through an engineering firm, probably cost you 10x that, but to actually just get someone to go and do it is not that expensive. But to get the floors completely level again, I wouldn't probably go through a project like that. If your goal is to make it perfectly new build, plumb and square, you're probably better just to buy a new build than try to take an old building and make it like that. Some of the charm and the character is in everything not being perfect with those older buildings. So I would say your ROI is not going to be probably there. A lot of people over renovate. Don't over renovate. Do enough that you protect the building, or maybe pass. If it's got major structural issues, might be better to buy something that doesn't look nice, that has really good bones, that you just need to put new floors and paint. That might be a better investment and a way better lift on ROI. So I don't know. I haven't looked at the situation. So every property situation is different. So with the debt ceiling talks potentially stalling, do you think it's worth buying VIX calls? Maybe, especially tomorrow. Like tomorrow might get a really crazy. My forecast is tomorrow is going to be an insane rally day, which has been needed the last 2 days. Every time you have a big downward movement or a big upward movement, there's typically a reconsolidation. And in that consolidation moment, there's a little bit of volatility where in this case, I think it's going to spike back up towards the highs. Could be a good opportunity to short. Again, I don't know. I don't want to give any advice on that specific segment because none of us know where things are going. Data would suggest it's more likely than not there will be some more retracements down. So the NASDAQ will probably cross under 320 at some point this year, meaning it's at 337 now after hours. So there's probably, what does that work out to? Like at least a 4% retracement at some point. So if you were to go 6 months out and short the market, something that did, not a margin, don't take big risks, that contract at some point, if you're patient, will pay off for you. That said, over the long term, you want to be long because in a 5-year span, it's going to run probably up. So don't be a bear for the long term, be a bear in the short term. And if you get your chance to get into the profit, you take that and you exit. Today, as an example, was a great day at the bottom. I took profit. I closed half my short out today. And it's like a lot of guys were greedy. I was talking to were like, keep holding your short, don't give up. It's like, no, I'm taking profit here. And I'm glad I did because now it's rallying after hours. I'm going to re-engage the short again, probably at the highs tomorrow. Maybe it goes 338 tomorrow on the QQQ. And I don't want to look into that. I don't want to be spending my time thinking about this all the time because I'd be spending that same amount of time on a real estate deal and make 500 grand. Whereas the trading thing, I'll make like 20, 30 grand here and there. I'll have days where I'm up 100. As an example, it's like, there are definitely times where it will be prudent, I think, to put my time to the optimal use. And I think part of me, like when I started this journey, I'm 30 now, and I started this journey when I was 17. So 13 years ago, I found the book Early Retirement Extreme. More than 13 years ago, I found FIRE, Financial Independence Retire Early, and it wasn't well known. There wasn't even a subreddit for it. There was no videos on YouTube because YouTube wasn't that popular yet. There was a janky website where we read about a 30-year-old who had done this. His name was Jacob Lundfisker. And then later a new guy came around and he was brand new on the scene. This was like 4 or 5 years later, Mr. Money Mustache. And now he's old news, but he was new on the scene. And when I started this whole journey, it was like the life I wanted for myself and for my family was a life of complete control and freedom. And for me, a large part of this decision to stop trading, which is coming, I'm going to finish off what I've started. So I'm going to see this thesis through. But when I see it through, I'm not going to trade anymore because the lifestyle I wanted, I'm close to having it. Like I have the passive income, between 50 and 100 grand a month comes in without me doing anything. Like that's just from my investment portfolio. So I don't have to do nothing. I can make, like if I have a good year and everyone pays their debts and all the mortgages are no one defaults. If one defaults, it's okay because I can make a big profit on the default sometimes. But in a really down market, let's say, it's not as good. I can make like 70 grand a month. On a good month, I can make 100 grand a month. That's without trading. So why would I trade? When I have that much coming in, it's not to brag. It's like for me to reflect, my goal is 10,000 a month. It's like some months I'm 10x what I thought I needed to have a Lux Fire lifestyle. And when I reflect and think back, why would I put myself through the stress? Because it's very stressful on those down days when you're trying to trade and you're in and out of positions and you're trying to maximize everything. And it's a challenge for the brain, but it's just the stress, like the emotional toll that it takes. You can ask my wife on the days when I've had a bad trading day, I feel like absolute dog shit. And like, I'm not the person I want to be. It's just not a good use of my time. Emotionally, it's very difficult. And then on top of that, like I had a buddy over on the weekend and we were chatting about, billionaires and, we like to talk about this because both of us probably would be billionaires by the time we're in our 60s. And we were chatting about like the richest traders in the world. Do you know the richest trader in the world, George Soros? Compare his net worth to like all the richest real estate guys. He's like 5 billion or 6 billion. All the richest real estate guys have way more. And Warren Buffett's not a trader, so you can't use him. There are almost no traders that are very wealthy. To me, that's a sign that maybe trading isn't the way to build ultimate wealth, and that most traders don't make massive amounts of money over a long sustained period of time, and very few beat the index over the long period of time. Whereas in real estate, I know lots of people in real estate who beat the market. It's very easy. If the market moves at 5%, it's very easy in real estate to do 20 or 50% in a year. So for me, real estate's the better place to put my money. I just need to have, a good running mate if I'm going to blow up and do things at scale. The other passive option, which I've been considering, is just rolling out Rosehart Capital as the lending arm. And I already have Rosehart Capital as the lending arm. If you guys need funding on a flip or a deal in Ontario specifically, but in Canada, I fund deals all the time. I just funded a hotel deal here in Ontario. I have a real estate developer that I've lent to, and I've got several other friends in the network that I've lent to as well. And I just finished up a mortgage on a property here in London, and I like that. Like that business is great. I could hire an assistant at 40 grand a year and they'd be my admin and they could run that business. They can send out mortgage commitments to people. We can do appraisals. We can do consultations. That can be generate income and revenue. And we can lend out on short-term projects. You know, at the bank, I'd say charging you 6% interest or something on a variable right now. When you refinance, you buy a property, you stabilize and you refinance. The bank charges you 3 to 6 months interest penalty when you refinance. If you go and with another lender, they'll charge you that fee still. If you sell the property, you flip it, they charge you that fee again. So with an A-lender bank, you end up paying on a 6-month term 20% interest effectively, because all the fees, you add up all the fees of the interest differential, all that, you're not really paying 6%, you're paying like 20. So if I just work in that space, in the stabilized property space, like when you first buy a property that's just, the bank might not lend on it because it's ugly or it's got bad tenants or problems. In that space, if I spend my time there, I can build a passive income business around that where I'm just lending and I can make $100,000 a month, no problem. And it's very passive, like a couple hours a month for me to run that business and to evaluate the deals and to check in with people. Most of that can be outsourced. It's a very solid business. I can make a 15% yield really safely there. It's hard to generate a 15% compounded yield in the stock world. It can be done, but it's difficult. There are very few people over a long period of time who can do it. You get really great runs and then you lose a bunch, but consistently, if you're trying to generate safe, risk-adjusted returns, it's way less risk to lend out a mortgage, 70% loan to value, than it is to put your money in the stock world. If the real estate, even in buying a property, if you buy a property and it falls 20% in value and you put a mortgage on it, your capital is the down payment. So if the market falls 20%, you put 20% down, you've lost 100% of your money. It's all gone, everything. Whereas you put that same amount of money you would have put in a down payment on a property and you lend it on a mortgage on a property and the market falls 20%, you lose nothing. You've lost zero because there's still 10% equity in the property. So it's much more difficult, or not difficult, more risky, I guess, to do equity investing than to do debt structured investing. So there's that. But yeah, I wrestle with that all the time. What's the best thing? You know, part of me wants, like I spend a lot of time with my family and that's important to me and I enjoy my lifestyle. And like I've been doing this new workout routine where I've been trying to get bigger. If you guys can tell, I've been pumping the irons. Anyway, I have been in my home gym working out the last month and I've put on 10 pounds. So I don't know if anyone's noticed, but hey, crypto in the comments said, Mike, you're looking bigger. What tips do you have? That's the way to get your question answered right there. That's what you got to do. So what tips do I have for what? Getting bigger, I guess, is my understanding of that question. Unless I was talking about something else when you sent the question in, I'm going to assume you're talking about fitness. So I'll share the fitness stuff, sure. So what have I been doing that's been working really, really well? Now being in my 30s, one thing I've noticed, my body doesn't metabolize the same way that it did before. So one thing I'm doing the last 3 years is intermittent fasting, IF. Intermittent fasting is where you eat in my case, I do a 7-hour eating window and a 17-hour window where I don't eat. So what that means is typically I can eat from like 12 to 7. So from 12 p.m. to 7 p.m., I can eat whatever I want. I don't eat whatever I want, but I could. And then for 17 hours, I don't eat. And I go through ketosis. And in some days, I do a longer fast and I go through autophagy. And autophagy is Nobel Peace Prize winning research that basically the term that came out of that was basically the nuts and bolts of it are that your body goes through a cleansing and it gets rid of old cells. Your chance of getting Alzheimer's is lower. Your human growth hormone skyrockets. So I'm taking nothing. I don't take, any those steroids or crazy stuff like that. I just 100% natural. I eat a lot of protein. That's it. I even think creatine is a little bit risky because it causes baldness in some situations. So I don't even do that. I have taken creatine before. It's naturally found in steak. It's a healthy, no consequences really. But there is one consequence, like I said, the balding that comes out of taking creatine a little bit. And there's some other bloating and things like that come with it. So it's not for me, but I'm pretty much, that's 100% natural. So that's what I subscribe to. And I do protein powder in my smoothies. So definitely want to keep my testosterone levels in check too by being healthy every day and doing that kind of stuff. I definitely think that it's important to want to be as natural as you can. There's no really good reason why you want to put that kind of stuff in your body. Like even a ton of protein. Like why do you want to have that much protein? in your body. Like too much protein's not good either. So everything in moderation has been something I subscribe to always. You want to not just be sitting around all the time. You want to be putting in some activity, right? So for me, what works really well is like sprint, rest, sprint, rest, sprint, rest. So I go really hard on whatever it is I'm doing, then I rest. Then I go really hard when I'm doing, then I rest. Go really hard when I'm doing, then I rest, and then I go a set to exhaustion. And whatever it is, pull-ups, chin-ups, calisthenic workouts, whether I'm on the bench press, whether I'm squatting, deadlifting, whatever I'm doing. I try to do very little deadlifting and very little squatting, especially heavily, because again, that's where people get the most damage, is when they do deadlifting type exercises, and I don't want damage. I want to live forever. So I don't want to look like Arnold Schwarzenegger, be super big. I just want to be fit. I want to be healthy. I want to live a long time. And for me, aesthetic is the goal. So it's not strength, it's just to look good. And yeah, it's been going well so far. And I feel like I'm probably in the top 5% for people in my age and fitness. So I'm happy with that. I'd like to get top 1% for sure. I read something like that 99% of people of men over 30 can't do 50 push-ups and can't run a mile. What was the other thing they can't do? A 1 minute plank. It was like crazy, like how low the bar is to be top 1% in fitness. The bar is also super low in finance too. Like to have $1 million, it's nothing inflation adjusted now. $1 million was something a lot. Like when I started the journey 13 years ago, $1 million was a lot of money. $1 million inflation adjusted now as inflation runs wild at 10%, 5.3% core inflation, but like, real inflation. Real inflation. We're talking about the price of a property over the last decade has averaged over 10%. And that's 45% of what people spend their budget on. Groceries are up 18% over the last 2 years, year and a half. And it's like, well, of course, people spend a third of what they make typically on food too. So there's 2/3 of their budget is up crazy. But don't worry, your TV's cheaper per inch of size of TV. And like, don't worry, like that flight's now a little bit cheaper because of technology. And like, don't worry, like this service is cheaper. And it's like, man, inflation is crushing people right now. Lost a train of thought here, but anyway, to be a top 1%er is not that hard. Just put in a little bit of effort every day and it compounds. I work out every day. I do some lift or some exercise 7 days a week. And some days I don't feel like it at all. I'll just drop down to 50 push-ups. And I can't even do all 50 at once. I'm like, I'll do 25 and 25 because I'm just not motivated today. I just feel like blah. And just do something. Just don't stagnate. And so that's been something that's been helping me get stronger and stay in good shape. And so yeah, it's been a project for me. Project Rosehart, get it into better fitness for the next little bit. We'll see how it goes. Hope I don't give up. That's the key, right? It's just not giving up. Even if some days I don't get better, it's like, hey, if I just did like 25 push-ups today and 25 squats, and I went for a quick little like jog around my house or did something, or grabbed the kettlebells in my living room and just did a couple curls, maybe a few, if I had 2 kettlebells or 2 dumbbells, just do a couple shoulder presses, like just did something. I try to just do something every day, work one muscle group, and it's like, at least I'm not falling behind. If you do nothing that day, your body's just deteriorating. And especially as we get older, we lose strength and we lose, our ability to have a quality life when we're older. And it's not even just about living longer, it's about living better. I want to be strong enough to be able to pick up my kids up and run with them and not be tired. Or I want to go hike a mountain, I can. I'm 30, but like I barely lived. I got a lot of life left to live. I want to hike mountains. I want to do cool things. I want to go around the world. And my kids will be adults when I'm in my 40s. And that's when I'm going to live my best life. I'm going to go around and travel the world and have a lot of fun. And I can't do that if I'm not in great physical shape. Go on my Instagram stories today. You can see I did well over 20 pull-ups today. And some people were saying they weren't 100% real pull-ups. So I did a second set where I hung all the way down, showed that they were real. Those are a struggle for me. Pull-ups, I've not had, I typically don't have good, whatever this strength is, like the pull motion when I'm pulling up. I just don't have that. My shoulders are not very strong, I guess. And my lats aren't very strong. So I've always had a hard time with pull-ups. Push-ups, no problem. I used to, when I worked in my days at Infotech and I was a senior analyst there, someone on the sales floor challenged me to a push-up challenge. I trained for a couple of months. This was like maybe seven years ago now, maybe longer. But I did 700 push-ups over the course of the business day. And I got that push-up challenge belt. So there's a time where I could do, I stopped partway through. I could have done more probably, but it's a long story. It's a funny story. He said he could do one more, and he did one. Anyway, train of thought. Oh, like 1,000 push-ups as an example was another challenge that when I was younger, something I subscribe to. And I think it's over the course of a day doing 1,000 push-ups. Like that's peak fitness. And that's something I want to get back to. It's a goal of mine. They're not all one set, right? Like you do like 50 push-ups, 20 push-ups, 20 push-ups, take a break, and throughout the day you do them. And when you get to that limit, when you're wherever your limit is, like for me, it was like 500 push-ups. At that limit, I would do like 5 or 10 at a time because I was exhausted. And doing like even 5 was just so hard. But it's that mental push, right? And that's something that, you really do need in business, in life, is consistency and a little bit of a push. Like you just need to put a little bit of effort in, and that'll lead to big results financially, whatever it is. So that's my advice for you guys. Consistency. Always improving a little bit every day. We all have bad years. We all have bad days. Last year I had a horrible year. I lost $1 million in crypto. I lost another $700,000 in my stock portfolio. My real estate portfolio, I sold most of it at the top, but the couple properties I had left also fell. Market fell 20%. So I guess even the properties I had left probably cost me another $1 million in losses, right? Like not real losses, like the properties that will come back in value. I don't care. But I guess book value or market value, to book value changes if real estate goes down in value. And so technically if you own a property in London, Ontario, or in anywhere in Ontario in the last year or two, you felt that same pain, right? Your net worth changed. And so I don't let that take me down. I just focus on the continual growth. I'm much further ahead now than I was 2-3 years ago. And so it's like, wow, okay, I'm way further ahead than I was 4 years ago, and 5 years ago, and 6 years ago. And so it's just like trying to do a little bit more every day to try to grow that goal. And having goals as a human, it's just something you need to have. Like we just do so much better when we set person who gets defeated when you don't reach your goal. Set smaller goals. Like your goal might be tomorrow to get out of bed. If you're depressed right now and you're struggling, it's like just getting out of bed some days is all you can do. Just get out of bed and stand up and go walk outside. Don't commit to a walk, just go stand in the sun for a second and let your body, cycle to the circadian rhythm of the sun, just get into that rhythm, and then maybe from there, maybe you go a couple steps to your backyard and then come back inside. That's better than staying on your bed. And then maybe you do something. You'll look on realtor.ca. You'll look at some properties and that's something. Maybe you go look at a property in person. That's something. Maybe you throw one offer out. That's something, right? You throw another offer the next day. It's something. Eventually an offer gets accepted. That's something. You keep trying every day. You don't give up. That's where a lot of people, they stop. They look at some properties. They don't go any further. They open their brokerage account. They don't learn how to trade. They don't even not even learn how to trade. They don't even learn how to place an order to buy an ETF, to buy the index. They can't even figure out how to open the account, let alone fund it and then start doing things with that. So just taking steps, and it's not funny, it's the truth. And I'm just as bad as anyone. My Bahamas Corp that I've been trying to open, geez, they sent me back a list of things they wanted. I've been sending them the things that they need. It takes time. Sit down and get a reference letter from my bank with a 3-year recommendation and get together all these random documents they're asking for. Sometimes takes me a long time to get through the checklist of things I have to do. And it's like you just prioritize that thing that day and do one thing. Like today I'm going to send this signed document towards opening that corporation. And it's not everything they've asked for, but it's something. And you just keep moving the needle forward little by little. And what you find is you look back on the year and you're like, wow, I made 365 moves towards my goal. And it just seemed like you'd made one little move each day. I called the bank to ask about financing, or I called this new lender, or I went to this networking event. I pushed myself and I went there. I was uncomfortable. I'm an introvert, so like talking to the camera is really easy. I have a really, really hard time going out and speaking to people in large groups. I can become extroverted, but when the event is done, I'm exhausted. It's taken everything out of me. That's pushing yourself, right, out of your comfort zone, and that's how you grow. Same as with your muscles, right? Like you've got to push yourself to grow. So yeah, push yourself to grow. Bum, bum, bum. I lost my spot now. I gotta scroll down and find you guys. If you're just starting real estate investing like me and you had 100,000, what would you be looking to do? So it depends on how much time you have, but if I was you and I had the time, let's just assume you do have the time, there are so many great opportunities out there. I would go and find something under market, use that as a deposit, or use the 100,000 as 10 deposits for 10,000 each on 10 different properties. Start locking things up conditionally. and have 7 business days, especially in this market, you can easily ask for conditions. Have 7 business days of condition for partner approval. And then go and put an assignability clause in that offer. And then go to networking groups and say, hey, I got this property under contract. Anyone want to JV with me? Anyone want to take the assignment? Go check out the property. I'll sell it to you, this contract, for $5,000. You'd be surprised how great of an ROI that is. You put $10,000 deposit down, you can assign it for $10,000. It's 100% return on your money. So in the beginning days, there's lots of ways you could flip the real estate contracts in the beginning, or find partnerships with people to bring the money. And I would take that money and you grow really quickly using time. So if you invest the time in the beginning, you can find some home run deals, start generating an equity base. Once you have a base invested, then it becomes more important of how do you keep that capital deployed, right? Because cash sitting is losing value. So you don't ever want cash sitting. You want your cash always working for you inside a property, invest inside of an equities or a property, or lend out, doing something to generate income over time. So yeah. Is positive cash flow even possible in the GTA, or should I look towards investing in states like Ohio? It is possible. I do know people who are able to squeak out some cash flow near U of T in the core, but they got to put 10 bedrooms in, and they've got to rent each bedroom out like with a TV, and they furnish it and stage it and make it look really, really nice. That's how you're able to get the cash flows, by running an alternative strategy that takes a little bit more time and energy. But yes, you could turn any property in most markets into a cash flow positive. Not any property. There's lots of condo. Pretty much any condo is like cash flow loss. If you own a condo, probably sell it. It's probably not a good investment. Or a single family house where like the only play is to rent it to one family. That almost never works either. Although in like a lot of states in the US, that does work. Yep, houses that are $200,000, $300,000, $400,000, those can rent out and they can cash flow. But in Toronto, your detached house is $1.5 million. That's never going to work when rents are $3,000 a month. That rent to price ratio doesn't work. Most of North America doesn't price out in the major metropolitans, cities. Doesn't work. So yeah. Maybe next week I'm going to try out to do that private stream where we do half the stream on YouTube and then we do half of it in like a private Zoom call. It's something I want to do. Yeah. I'm going to try to do that, guys. Maybe I'll drop a link at some point on my stories and you guys can sign up for it. Michael Chung says, would you ever flip houses outside of Ontario? We do that in Florida. So yes, I would. Would I do it? I just don't have the infrastructure lined up anywhere else. So right now, those are the 2 places where I would consider flipping, is Ontario or there. Though it could be interesting to do something in Alberta. It's a potentially interesting market. I just don't have the ground infrastructure laid, and I don't want to invest the time right now. Mr. Michael says, if I was living in Canada, I'd be happy to learn and be a property manager or something. The thing is, to teach someone to do property management well and to manage, project manage renovations is very time consuming on my part. So what I'm looking for is someone who already knows how to do it well and wants someone who can focus on capital raise and growing. That's more what I'm looking for. Training someone is a lot of work. And there's a lot of the time when you train someone, it doesn't end up, they realize how shitty property management can be. And so really you want to find someone who's like, the ideal person understands the business already and is super tech savvy. They understand how to bring VAs in and integrate AI like ChatGPT into the business to do things more efficiently. You need to have $3 an hour virtual assistants. If you don't, your property management business is going to be a shitty ROI for the person running it. You need to have those low dollar per hour workers to generate a hard ROI, because you can make a spread on each of your employees. And if you are paying them too much, then there isn't a lot of margin in that business. So, yeah. Bum, bum. John says, passive income. Yep, that's true. Which investments are you invested the most? So for me, it's probably a third stocks, like stock option trading and stock portfolio. I have some long-term dividend plays and stuff too. A third active flipping real estate projects that are generating an ROI, and a third is, another 30% is lending that I'm doing right now. And then another, obviously 10% is like crypto alternative investments. It's probably a higher allocation than I should have, but I like crypto and I like tech and I think the future is bright. And I think those are areas where we'll deliver or generate additional GDP growth above and beyond, making labor inputs less and less important. So I'm bullish on that. So that's kind of like my long-term growth piece of my portfolio. But yeah, together that's kind of what it generates on average. And that includes, you know, well, that doesn't include crypto, I guess, right now. But if I allocated everything to private lending, I could generate $100,000 a month probably. Now I wouldn't have that appreciation upside. The only time I would get any upside would be if someone defaulted on a mortgage and I got to go and claw in there and take their property for pennies on the dollar, and then I took over the property, finished the project, and then put it up for sale. I'm a realtor, so I could do that. Put it up for sale, and I would generate additional ROI for me. I'd get the appreciation from, or I guess the forced appreciation from that person defaulting. Hopefully they don't default. I don't want people to default, but when it happens, it can be fruitful sometimes. So, yeah. Roy, I don't know about that. You could do some research on that, and it does a little bit assist in, it will help your beard growth though. Like you could, in theory, maybe I should get a real beard because I don't have a real beard right now. Take some creatine to get a real beard. There is some data that suggests that there are some small negative side effects to using it. So if you used a very small amount, a very, very tiny amount, way less than people who load up on it use, you'd probably be fine. It's naturally occurring in meat. So I just try to eat a lot of steak and I get it that way naturally. And I feel good. So that's been how I've been trying to get it, is just by not, like, it just doesn't make sense, I think, and to overload your body with that stuff. But you do, like, again, when I was a varsity fencer back at Western, our coach had us take it, and they had a scientist came in from University of Toronto, and they gave us a presentation on it. And I'm well aware of using protein powder and using creatine. Those are natural ways. I know people use pre-workouts and all that kind of crazy stuff. I'm not about pre-workouts or post-workouts or any of that. I work out fasted. I haven't eaten in 18 hours and I go hit a workout. And then I really feel the effects of that because I haven't eaten. And then I bring in protein in my body right after that, and I hydrate my muscles, and the effects have been fantastic. Fantastic. I've been feeling great, and I think I've been looking good too. Will says, hey, welcome to the stream. Bush says, opinion on corporate whole life and critical illness policies seems like a great way to pull money out at a lower rate. Pros, cons. So I'm not super deep on how that would play out within a corporation, but my general understanding, when I had my LLQP insurance license, and at a time I was well versed in this, I've gone rusty, but my understanding is you can use corporate life insurance to get money out of your corporations. It's true. It is a way to get it out. The challenge, I guess, is the tax savings greater than the fees? Now, when I can underwrite my own whole life policy and I got the first 1 year of annual premium back as a bonus for writing the policy as my compensation as the insurance agent, that made a lot of sense, because the first year of premium you lose. Imagine you had an investment where in year one, the ROI was 0. You lost 100% of your investment. Then year 2, you put money in again, it starts growing. That's whole life insurance. The first year, you put it in, you lose everything. So if your premium is $12,000 a year, year 1 you put 12 grand in, 0, nothing. Gone to fees, to the agents, to the insurance. You're probably not gonna die. Like, chances are very, very low you're gonna die, especially someone like me, super healthy. I'm probably gonna live to be good genetics. My grandpa's 85, still hikes. Like, I'm probably gonna be fine. Probably gonna live to be 100, statistically speaking. Probably 125 to 150, given the way science is progressing. So you're taking a bet, in part, when you get in any insurance product, something bad is gonna happen to you. And if I was a little bit fat, if I had like a fat belly, or I had some like health factors that no one knew about, then there could be like some probabilities in my favor for hooking up some insurance. Because like, hey, I'm a fat guy, or like, I'm unhealthy, or have some like really bad, health condition that I know might creep up in my family. It's like, okay, maybe then could make a lot of sense to get some insurance, because that would be a good ROI. But if you don't plan to die for 150 years, if you run that same cash invested in a whole life insurance vehicle and into like a tax-free savings account, or into, not even tax-free, that's cheap mode, because that way outperforms. But like an open unregistered account, capital gains max at 24% tax, because they're half tax-free in Canada. So 24% is the max tax you'll pay effective on every capital gain. So you make 100 grand, you lose 24 grand of it. But it's compounded. You don't lose until you eventually sell that property or whatever that asset you're holding, that stock. So you could defer that tax for 100 years if you wanted to, and pay only tax in year 100. So they both grow at the same amount over time. And there is a tax liability that exists here potentially in the unregistered accounts. But over here, the cash values in the unregistered accounts, they grow way faster because there's no fees. So in year 1, the ROI is way higher in the open product. Year 2, eventually it should catch up with the tax vehicle, assuming that tax rates increase over time. It could make sense. If you ever leave though and go to a tax-free domicile like the Bahamas or the Caymans or Dubai or anything else, or any tax rules change in your favor, it was a bad investment. If you don't die, again, a bad investment. It can make sense because you can get money, you can save on the tax ramifications of that are potentially substantial. And it can make sense. And in some cases, you can use pre-tax corporate dollars. It results in different situations. But yes, there are situations where it does make sense to use critical illness in your business, especially on key employees. And it can transfer from, if the employee leaves and a new employee comes, you can transfer that policy in a lot of cases, those employee payout policies. They generate good cash value over time. Just be cognizant of the fees, because the compounded value of those fees against the tax vehicle sometimes doesn't make sense. And I think the insurance agents that sell it and the guys who are in the wealth space who are referring business towards those policies, they have a bias, I think, to overstate the savings without factoring in that, hey, you're going to lose a lot of this in fees and premiums, insurance fees and premiums to the agent. They get paid well to write those policies. Year 1, there's a huge fee. It can make sense. It can make sense. And I have a whole life policy. It does generate cash value. It is growing. I have one for my daughter as well. For me, that's money I've set aside that I'm okay it getting a 6% yield tax-free. And that's a horrible return in my opinion. I can do way better. But it's money that I've put aside, and I know the fees are high. I know that it cuts into my net return, but it's just in case. So I do have a little bit there. I do subscribe to it. I used to be an agent that could sell it. It doesn't make a lot of sense for most people. Most people aren't in the highest tax bracket their entire lives, including in retirement. Most people aren't in the max brackets. There are other ways to mitigate tax as well. So is it the best tax savings vehicle? No. Can it be valuable? Potentially. If you really hate the government and you want to just stick it to the government, they can make sense. There are probably better, especially if you don't have other investment vehicles that are better. Like if you're looking at investing in a 7% bond with your money or putting it in these whole life insurance policies, the whole life insurance policies will outperform the bonds because interest income is horrible. So like the tax rate on it's like 54%. So you're comparing those two products. Well, yeah, the whole life insurance is going to way outperform. But if you're comparing it against real estate, where I can do a 25% capital gain compounded, I mean, it doesn't even hold a candle to it, right? So it depends on the type of assets you're comparing. Comparing to the stock market, the S&P 500, I think the S&P in an unregistered product would outperform over the long period of time. Holy, it's been an hour and 10 minutes. I got to wrap the stream up. I was enjoying it and giving you guys some value, so why not? Will you ever go back to a hairstyle from your profile picture? Maybe. I've just been letting it grow out. You know, I haven't had a haircut in years. I cut it myself occasionally, like, you know, the hair in the front, I cut it so that it's out of my eyes. I did cut it here too. My wife cut it like a bowl, basically, just so it wouldn't be like super long. But I've been enjoying the long hair. Like for a long time, my bosses used to say, you have to keep your hair short and we got to meet clients and be professional. Forget that. Like I'm financially independent. I can do whatever I want. So I grow it out. I'm sure at some point I will bring it back. You know, people tell me I look better with short hair. I like having long hair. It's kind of cool. It's kind of like surfer vibe. You get to have like a good hangout vibe. So for me, it works for right now. And Michael Chung says, are you going to get injected with anti-age plasma? You're talking about Brian Johnson and the guy who was trying to live forever, who's started to drop his aging substantially. He's been able to drop, battery's going to die. He's been able to drop his aging rate substantially. He's aging like 60% of a year for every year that he lives. So he's aging like almost half as fast as he would be aging. So it's pretty cool. He's doing a lot of experiments on his body. He's got a blueprint you can buy that talks about ways to live longer and live better. So to optimize your sleep, your eating, all of that. Some of the things in his life are a bit of deprivation, but if it fits your lifestyle and cool, some of the things I'm going to incorporate, like getting good quality sleep, super important. I try to do that too. I have 3 kids, young kids, so I don't do so well with that category, but I want to do better with that category. You see these bags under my eyes? That's 3 kids under the age of 7. It's having 2 kids that are under the age of 4 as well. Anyway, I lost my train of thought. Oh, injecting. I would totally. Yeah, 100%. If my daughter wants to give me some of her plasma to help me live longer and she wants to donate that to me and it's of no harm to her, hell yeah. You know what? Like, I would do the same thing. I would donate some of my plasma to my dad if he wanted it. Like, why not? There's tons of cool strategies to live longer and to, if it's safe and it's, well tested and it's going to work. Yeah, I mean, I'm all about taking on new trends and medical advancements to live longer and live better, assuming it doesn't substantially, have any negative side effects of any kind. Like, as an example, he doesn't eat any meat, which, like, I love meat, so I couldn't cut meat out entirely, I don't think. Maybe I could, but I wouldn't want to. And I don't think he eats, very quality food. So he also doesn't go out in the sun very often. He only goes out when there's days where the air quality index is strong enough. So there's some things that he does are a little extreme, I think people find a little much. But, I mean, the data supports he's living longer, right? And so, like, he'll have a better life too. When he's in his 60s, 70s, and 80s, he'll be living a lot better than he would have lived if he just stayed fat eating chips. Just living, how he used to live, basically. He's a little bit chunkier, right? And working all the time. And pros and cons. All right, guys. I'm going to wrap the stream up. It's been way too long. Thank you, everyone, for watching tonight. You know the secret. You know the catchphrase. What are the 3 things that I say at the end of every stream? They are the levers to control your financial future. Spend less, earn more, and maximize returns and difference. Bye, everyone. See you next week. Oh, do me a favor. Go on Instagram and like my 2 recent reels. That would be cool. I'd appreciate that.